I had a conversation with my managing co-owner who at the time I'd had several years of decent success back to back, and he brought up the idea of getting onto the ownership track, right? So at the time, our agency, we've got several co-owners. There just wasn't enough at the table for A-share ownership. So they approached me with an idea that I loved and resonated with. They gave me a B-share option where it wasn't a buy-in option, but at the same time I could build additional equity and value into what I was doing, my book of business, and then with the future goal of one day taking that and utilizing it towards A-shares and being able to make it more affordable and attainable. So my path was kind of a stepping stone path where I was able to take the deferred compensation, the B-share, and roll that into an A-share purchase. And then recently, this last year, a few months ago actually, is when it was finalized, but this last year when I was having A-share discussions, I was in a position where, yeah, I could afford to buy in, and I had that opportunity. Put yourself into a position to where if the opportunity does come up, that you're going to be in a position to have that opportunity. That's how it worked for me. I'm not saying that's how it's going to work for everybody. Each situation is unique. And maybe the perpetuation model isn't where you're at right now, but maybe the perpetuation model could be for somebody who's willing to move, or transplant or take on an agency. And I've seen those transactions at my time at Leavitt Group as well, where we've needed to supplant somebody else to a different agency, and that's that could be an option. But that was my path. It worked out for me because I wanted to stay in Cedar and I wanted to be part of the Dixie Leavitt Agency long term. So that's kind of how I got into ownership and my path to A-shares.